But let's focus on the FMCG space. You had both ITC as well as Marico that reported their Q3 earnings yesterday. Abneesh Roy, Executive Director, Nuvama Institutional Equities, joins us on the show. Hi, Abneesh. Thanks so much for joining in. Well, it seems like the street suspected that maybe these numbers weren't going to be very great. In a strong market, ITC was under the weather yesterday. And the last few days as well, I think in the last week or so, it's corrected 6%. What's your view on the stock at current reckoning, and how did you see the numbers?
Yeah, thanks and good morning. Yes, so ITC results were in line with our estimate, but in terms of the key metric of cigarette volume, it was around 1 to 2% down YOY, which was below consensus estimate. So we do expect ITC stock to be under some pressure in the near term. It's a good stock to own from a one-year perspective, but near-term triggers are a bit missing. So what worked for ITC this quarter was, of course, in terms of hotel business, best ever quarter, very strong revenue growth of 18%, strong margin expansion. Even FMCG did well of 100 bips expansion in margins and resilient performance. The laggards were essentially paper business and agri business. Both saw revenue dip, and paper saw even margin pressure. So cigarette volumes essentially had a high base issue. Last year, because of the budget expectation of a tax hike, the cigarette volumes had seen almost 5% quarter-on-quarter growth in the base quarter. So on that high base, cigarette volumes were down a bit only. But if you see a 2-year CAGR in cigarette business, it is still around 9%, which is a decent number. Now, the next trigger for the ITC stock will be the hotel demerger and post-elections when the new government comes, what's happening in the budget. February 1st budget is not too much of a impact because this is the 5th budget, last budget for the government. So we expect that when the new government comes, then we'll get to know on the tax hike. We don't expect a tax hike given cigarette volumes are a bit soft only for the legal industry. Plus, there is an overall slowdown. So slight cut in numbers will happen for the consensus. And that's why ITC stock slight pressure in near term could happen.
All right. What about Marico? You know, the numbers were largely in line with estimates, but the problem is really the volume growth, right? I mean, barely 2% domestic volume growth. It just showcases the kind of pressure that the rural markets are still facing. For a Marico investor, what do you do now?
Yeah, so Marico also will be lower in terms of pecking order. Currently, we'll prefer Dabur and Imami in that space. So essentially, what worked for Marico was very strong gross margin and EBITDA margin expansion. And their premium personal care portfolio continues to do well. What did not work was, rightly you highlighted, volume definitely was soft, especially in foods. If you see X of the inorganic, the food growth was mid-single digit, which was disappointing. The competitive intensity is increasing from Tata Consumer, ITC in foods. In hair oil, clearly competitive intensity from Bajaj Consumer, Dabur, a lot of the regional players is there. And general rural slowdown is there. So net-net, if you see from 850 crore expectation of foods business this year, now they are likely to end to 750 crores. So Marico stock will be under some pressure. Its valuation is comforting, but it will be lower in terms of pecking order because growth has been challenging in terms of volume growth.
Abneesh, hi, morning. You know, one of the things, the few of the budget preview notes, and you say it's going to be a low impact event in that sense, as you said. But one of the things where the focus is likely to be is going to be, I mean, with the broad aim to boost consumption growth, which has been faltering. Various schemes, income schemes, and increasing the quantum of what is already there, etc. Do you think that perhaps is going to be one thrust, and is there any way to play it from in terms of your coverage universe?
Yeah, so currently there is a slowdown across the board. You see apparel, footwear, spirits, FMCG. There's a broad-based slowdown, but there are still companies which are doing well. So we'll be positive on Pidilite. You saw the numbers, 10% plus volume growth, strong margin expansion. Nestle results will come. We are positive on that. It's more urban-focused company and doing well in rural also. We are still positive on Tata Consumer Colgate from longer-term perspective. In terms of valuation comfort, if you see Hindustan Unilever and Dabur stand out, Hindustan Unilever results now, if you see post seeing other results, was not bad. Hindustan Unilever already 5% volume growth in 2 of their key businesses there. And going ahead, we see margin expansion and pricing growth coming back for Hindustan Unilever in FY25. Dabur, if you see Q3 results, anyway, the update has come. We'll wait for the final results, but it will be decent versus most other names. So these are the 4-5 names where we have more comfort, definitely in terms of performance and risk reward also.
All right, we leave it at that. Abneesh, thanks a lot for joining in. Appreciate your time here. Well, let's do one thing. Let us talk about the pre-opening rates now.